Stacey, I feel like I sort of keep up with the news. And what's the catalyst for this mega chip move from the lows?
Well, I mean, after Liberation Day, the chips got hit pretty hard. They're a very global industry, if not the most global industry. And the idea of significant tariffs, not even on the chips necessarily, but on all of the products that contain the chips, which is basically everything, had the potential to cause a lot of disruption. And so, at least for now, as those tariffs have eased, that's certainly helped a lot, right? We've also had a lot of the names reporting and, especially some of the more cyclical names calling for a cyclical bottom in markets like industrial. And then clearly, you mentioned NVIDIA, but the AI trade, which had sort of faded, is now clearly back on. And so I think it's a combination of all those things.
I like that.
That has taken the stocks off the lows after they got completely whacked in April.
Let me reiterate those three. So for one, we're kind of, resetting the clock and pretending, I guess, like the tariff issue never happened. Just on that piece of it. Right. Because, look, I think that's a good point, though. There's still 55% tariffs on China. Maybe that doesn't matter. Are there any takeaways from the various layers of tariffs or controls that, NVIDIA, for instance, the last earnings call was supposed to be all about how much its China business had struggled because of export controls. Is nobody talking about that anymore? Like, is that just off the table?
So let's talk NVIDIA on that. So they clearly are. And in fact, the export controls have been meaningful. They're losing, tens of billions of dollars of business. What is helping them is that the rest of their business is so strong, it's actually okay. I mean, they took $8 billion out for next quarter. They guided $45 billion, which was kind of in line-ish with the street, but the street hadn't taken China out. If it wasn't for that, they would have guided 50. They would have printed 53 or 54. I mean, it's insane how strong that is. So that's where they're benefiting. They're ramping their Blackwell products. The demand is there. They're going to sell everything that they can get out the door this year. And at least for now, China being taken out now you could argue it's de-risked. Like anything that they can actually manage to sell into China, at least in the near term, will be upside rather than downside.
And your colleague, others who follow the stock have argued, look at the Middle East deals they just struck. Look at what's happening in the EU. So to your point, they've got that tailwind. Then you're saying we also have actually a better improving economy. So simply the cycle we were worried was going to turn for the worse is actually maybe going to turn for the better.
Well, we don't know yet. I mean, what I said is like some of the cyclical names have been calling for a bottom. So take a market like industrial, which has been in a down cycle for like 8 or 10 quarters. So yes, at some point you ought to hit a bottom and hopefully channel inventories are lean. I think the question of sustainability is still open for debate. Right? I mean, because some of the macro data points in PMI and everything don't seem all that spectacular. And the tariffs, they're on pause for now, but I mean, they supposedly, the reciprocal tariffs supposedly come back in August, and we're waiting for the 232 tariffs on semi. So we don't actually know if the current strength we're seeing is actually real bottoming or if it's not. I mean, it could, in theory, just be pull forward in front of those tariffs. I'd say for now, though, things look better than people had thought. We'll have to see how things go as we move into the second half of the year. I don't think anybody knows.